What's up everybody, Tom here with another video. Well, it's that time of week again where we look at our technical analysis levels using our top-down approach together on the S&P 500, Nasdaq, gold, dollar index, Bitcoin and more. There's a lot to cover this week as usual, so let's get right into it. Stay tuned. So as we always like to do together, let's get started on this heat map of the S&P 500 companies. And we do so to get a better understanding of what happened over the last trading day and also the last trading week. We highly recommend finviz.com. It's a great website to use. So here we're seeing the same kind of trend now for a couple of months. Microsoft, Apple, Facebook, Google, Amazon were not leading the market. And that actually is healthy because they've been the ones that were trendsetters for the start of the year. In fact, if we take a look and we think about the last 3 months, it really hasn't been the FANG stocks really running the market, except for a little bit of Google for the last couple of months. It's been the other stocks, the banks, the energy sector, the semiconductors. All of these areas have done very, very well, and this is healthier for market breadth. And we've talked about that somewhat on the channel, but it's nice to see this coming through. When we take a look at the Friday close in terms of what happened in each sector, we can see here that energy again was having a nice recovery and that utilities, which was the sector that was rotated into over the last month before the US election, is still struggling across the board. Now we're starting to see a bit more of a move into materials, which has been pretty strong, I would say, over the last week. And we've seen a bit more of a move into things like XLI and of course technology as well, with the movement of XLK up 1%. I think technology, things like the FANG stocks could continue to have a little bit of rotation in them. And it's worthwhile dialing into the charts, having a look at that consolidation over the last 3 months and seeing where the price breakouts may occur. Remember, when technology breaks out, it suddenly becomes very hot when it was not so hot maybe a few weeks earlier. Always check that out if you're a trader in the US. CBOE market summary statistics. We've been looking at put call ratios to try to get an understanding whether the markets are about to fall or not. Remember, we use this as a contrarian indicator. Basically, if we have heaps and heaps and heaps of puts open in the market, it's less likely that the stock market will actually be able to crash. If we have heaps of calls open, that's a good news for, of course, the decline in the market as well, because what the Wall Street people are trying to do is make money from us, the retail traders. If there are heaps of calls expiring, then that's good if they expire worthless. And that means that, of course, they may want to push the market down. So we're continuing to see a pretty high ratio of course, calls open to puts. We're getting a higher number here. S&P 500 put call ratio is 1.68 on Friday. And when we take a look at the PCC data here and look at it over the longer term, we can see that we're going back down to the low points. Any reading really under 0.7, and we're 0.686 at the time of this recording, is starting to get to that point where we need to be very careful about putting in too many bullish plays. If you're in the market, does it mean it's going down right now? No. We'll talk about the price action soon. But at this point, we are getting to a point where basically we haven't seen put call ratios this out for quite some time. And this is where we want to start being cautious with our money, and PCC on TradingView is well worth always having on your charts. Volatility index as well is kind of lining up with that PCC stat. We're seeing 20 being touched and supported multiple times. If we go to a weekly, we've talked about volatility index a lot, where 20 is the key number. If market is underneath 20, like it was over here during 2019, you generally see a relatively stable bullish movement in the markets with some spikes throughout the year, which is normal in any healthy market. But during this crisis, we've always been above 20. And we feel that, even with things like this 20-50 exponential moving average cross happening here on the weekly, that if we get underneath the 20 zone, we may be looking at further bullish momentum and further stability in the market. When it's above 20, anything can happen, and volatility can certainly come back into play. US dollar index continues to fill the gap this week. Let's have a look at the weekly chart here just to get a better understanding. So we talked about how this 92 was really the last level of support for the US dollar. We can see over here that the previous resistances were around that 89 area, and that last time it got through 92 strongly, it pushed down to the 89 area. So this is why technical analysts do so much charting on the larger time frames. They try to get an understanding of where the market is going to try to fill to next. And you can see here that we had a very big decline on the dollar index last week. In fact, we've had such a big decline now that it's starting to move pretty far away from the daily 20 exponential moving average. And while we still feel that now that we've closed below this zone, we're going to go down to the 89 eventually, we may see some pull up this week, and look at the smaller time frames for that. Basically, we're looking at things like the 1 hour time frames and below for any pattern or any analysis where it basically forms something like multiple lows and tests, of course, a previous level of resistance like it did here. This could be signaling a little bit of a pullback, possibly to like a 91.20, and then of course the higher moving averages such as the 4 hour will be being reached for it. So always look at things like the 20 exponential on all the time frames and just see if there's a reoccurring event. Like here we've got 1, 2, 3 resistance touches. Possibly if we go up there during this week, we may see some selling of the dollar off this 20 exponential again, and it could provide us with an opportunity for day traders or of course scalpers. What does this mean for gold? Well, as the US dollar declines, we should see gold basically recovering and going up against the US dollar. But remember, 1850 support here is most likely going to act as resistance. And we've just seen the market stop shy of that. If we put our horizontal line down here at 1850, you'll notice the market just about hits it, goes to about 1847, and then starts to sell off right around where that all-important 20 exponential is on the daily, the red line here. If we do see a decline in gold, it's going to happen right here, right now. Any break this week above 1850 is going to signal that the bulls are firmly back in control, and we probably expect something like this, where it goes up to the 50 exponential, finds resistance, comes down, tests the 1850 from the top down, and then of course moves on to the next level, which could be well above 1900. For the sellers of gold, you need it to sell off basically here. It has to pretty much start to decline again, and then of course, if it does so, it's most likely going to go and aim back for the 1760 levels. So gold is well worth watching, but when we take a look at the weekly, we think about that 50 exponential, as we said, 1, 2, 3, makes sense for it to buy off each one of these 50s, and gold could be looking at some kind of recovery now over the next couple of weeks. Silver, another one that's recovering quite strongly. We are pretty bullish on silver. Noticeable areas this week. If we get above 26 for any reason, that's going to be a super strong level for silver traders. Basically, if we get above 26, we'll be breaking the previous support, which became resistance over here. And then that level, really, what we're going to be then seeing is probably a movement up to 30. So for silver bulls, that's the story of the week. For silver bears, there's a lot of chop that's going to be going on in between here, and you want to probably set a longer term alert for under 22. And if that happens, then of course, there could be some flash selling of silver. With silver and gold right now, it's about recognizing the bigger time frame, bigger areas, and then putting alerts or traps for those areas, and then making decisions when those zones are broken. That's really going to give you the best statistical probabilities over the next couple of weeks in the markets. Bitcoin continues its move on. We see here on the daily, very, very strong movements. I want to just go over to the weekly just to put this in perspective. Look at the previous peaks we had in the weekly in, of course, December period. We got over here, the 11th, we had basically our peak, 11th of December. Then what have we almost reached? The 11th of December again. So will it be another time like it happened last time where basically Bitcoin peaks in December early, starts to decline, but at the same time we see things like Ethereum and we see other altcoins actually do better during the month of December into the Chinese New Year. Now, you know that I'm a pretty big proponent on bullish momentum into the Chinese New Year. I think that things like Christmas, things like the New Year in terms of the Western one are all positive events for cryptocurrencies, as word of mouth is one of the big spreaders in terms of speculation. But then at that point, we might be seeing some weakness. So for now, cryptocurrency looks pretty strong. Obviously, we're just starting to coil now underneath that 20,000. If we go to the daily, we can see that we're starting to get into that range. Like we said last week, the range is the key. The longer this range goes on and coils underneath the 20, the more likely that when it goes up to the 20,000, it will actually blast through that zone. So let's think about what's happening here right now. We've basically got support through this 18,600 on the 4-hour in terms of closes. We have not had a close underneath the 18.6. You'll notice also it stops pretty much around that 18.5 most of the times as well. The other thing that we've got going on is a bit of a trend line now starting to come through the top here. So some people would see this as a series of lower peaks. So basically we have a peak, we've got a lower peak, and then of course we've got another lower peak with equal kind of troughs over here or equal lows. Now this is a descending triangle from that aspect. But what I would say is this: descending triangles go two ways. So if it does break out and make a new peak above this, what that's saying is that it's been coiling, it's broken out past this pattern, and it looks like it's going to be set to definitely blast past the 20,000. Remember, these kind of patterns, while they're showing us weakness in the market, if we get strength, so let's say we come down, test again, go up, break through, test from the bottom, and then move forward, what we're really doing then is we're making new series of highs, we're breaking past previous peaks, and we're showing that the market has considered the level and it has moved in the direction bullish. So for bears this week, you're looking for an 18.6 or under close on things like a 4-hour. And for bulls, you're really looking above this kind of line. You want to see something like this happen. And I doubt that 20,000 holds it if this occurs for the bullish side. Most likely it's coiling before 20,000. And that means that when it gets up to 20,000, probably blows through it and continues on. It's a great lesson in, while this particular type of pattern shows you something and most people look at it for the short side, it can also be a very good bullish type of pattern if it breaks to the top side. Just got a little bit more careful with the way you look at it from that aspect. Ethereum is also lining up very, very nicely. I won't go into the larger timeframes here for Ethereum just due to time constraints in the video, but basically we have a beautiful 620 resistance through this 4-hour. You can see here 1 resistance peak, 2 resistance peaks, 3 resistance peaks, a series of really kind of movement higher here. There's a bit of a trend line there that you could put on your charts. And if it breaks through above here, what do we expect? The standard pullback into the 620 zone, and then most likely buying pressure. We're still pretty bullish on Ethereum, and we think that it can certainly move towards things like $800 from a technical aspect. And we've looked at that. So go check out some of our previous videos if you're interested in finding out more. All right, on to the broader market. So let's talk about the S&P 500 to start with here. The S&P 500 has been definitely doing very, very well. It's been pretty much bucking the trend of what conventional wisdom would tell you, and the price action has been pretty bullish in the last couple of weeks. So we've now got our monthly pivots open for the S&P 500, and we can see that last month, the monthly pivot was actually quite well respected. Look, it got here just near the end and kind of just sold off that area and it just reached it. So this was the R2, the R1 certainly did have some sell-off, and previously we've gotten very close to these kind of periods. So this week we've hit 3,700 on the Friday. What do we think could happen? Well, we could definitely go to the 3,750 R1 pivot for the month. We generally like to touch the central pivot at some point. You'll notice over here we've had touches at the start of the month here, touches during the month over here, during the month again, and during the month again. So what if we had something like it goes up to this pivot, finds resistance, the put-call ratios go really out of whack even more than they are, goes crazy, and then we actually have a sell-off event into the central pivot, which is at, guess what, 3520, that zone we've been talking about quite a lot recently. This is certainly a possibility and certainly worthwhile considering and having on your charts. So check out this week things like 3750 and see whether it acts as resistance. It'll be worthwhile definitely considering that zone. If we go over to the US 100, same kind of thing really, a big movement up. We've really seen a clear break above this resistance of the 12,200. It's closed above, then come down, tested it, big bullish momentum. We've now got an all-time peak here. If we go to the weekly, we'll see how that looks. Very strong looking candle. And there's nothing to say that we should be going bearish here, except for, of course, a lot of indicators, divergence, those types of things. So we could be still lining up for more bullish momentum in the markets right now, and then a further bullish momentum until we hit maybe that R1 on the S&P, and then we start to see some selling. Remember, Wall Street does what we don't believe is possible, and unfortunately right now, that's been constant melt up over time. And that's frustrating for all of us, isn't it, guys? But at the same time, if you're in it, it feels pretty good to know that the market is manipulating to the upside. I'm still pretty positive that we'll get a return back to the 20 moving average here on the weekly. We can see that it acted as support one time. So if it does come back down, we'll get another most likely test of the support, and expect that to potentially occur when we least expect it, maybe about that R1 on the S&P. Some key levels here for the S&P for the week ahead are going to be really that 3750 for the resistance. And of course, if you're looking for zones that might hold some form of buying pressure, possibly around this 36 kind of 40 zone, and that's where the 20 moving average is on the 4 hour. I don't think there's that much right now for us to be looking at, but we will do our daily analysis throughout the week to try to get a better understanding of things moving forward. When we take a look at the calendar, forexfactory.com is definitely worthwhile considering and having on your charts. You can set it to your time frame as well. You'll notice here that it's pretty lackluster week of news in terms of the main kind of bits of news. We've got Euro monetary policy statement, which has had an effect on the markets and of course currencies. And overall, other than that, if we go into even the week after, it's basically a pretty solid week for technical trading. It's not going to be too news regulated, except of course if Congress come out with some form of stimulus. All right, guys, well, I hope you enjoyed the video. If you did, remember to subscribe and, of course, hit that alert button. And thanks so much for the support recently. Give us a thumbs up, and we'll see you, as always, Monday night live for the stock markets. Join us there. Bye for now, everybody.